Shah. You're watching Buy Now Sell Now from 18 Now with PR Live studio, and the market is definitely in red, but a lot of stock-specific action owing to Q2 earnings is being witnessed. But then let's move on and let's talk about Symphony's Q2 results, where consolidated numbers on the revenue front has come down almost to 43.6%. EBITDA and EBIT margin also have come down. But then let's understand more about the Q2 results and for the quarters coming ahead. We are joined by Rupesh Shah, Managing Director, Corporate Affairs, Symphony. Hi, Rupesh. Good morning and welcome to the show. Let's talk about the revenues first. A sharp fall by over 43% on year-on-year basis. But looking at it, it looks like due to inventory overhang in the general trade channel. But what exactly is the issue here? If you could just elaborate on that. And how long do you expect this destocking cycle to last? And when could channel demand normalize once again?
Right. So, as you rightly pointed out, of course, on account of subdued summer and also on account of extremely high base in previous year, there is a steep decline, and this is not unprecedented. In the past, whenever summer has been weak in the off season, that is in September and December quarter, there has been a subdued performance. As far as inventory overhang is concerned, there is inventory overhang at the trade channel level, which is fully paid off as far as company is concerned. However, at this point of time, the inventory with a trade channel almost is in line with what it was as on 30th September 24, because to that extent, trade purchases in September quarter was less. And as far as inventory normalization is concerned, normally it starts normalizing starting February, as it has always happened. Second highlight of the season is, and this quarter is, even though there is a fall, but by the way, in first 6 months, the revenue is third largest in the history of the company in last 11 years. And secondly, the products which are selling around the year in trailing 12 months, they have contributed almost 26% of the sales, which are not dependent upon the summer or household air coolers. And that has also contributed to an extent positively in this quarterly performance.
Good to know that. But Mr. Shah also talked to us about the demand outlook this time around. It's been a weak quarter. You just highlighted the factors over there. But what's the visibility of an uptick in the second half? Because for the next summer season, the pre-buying may start happening soon.
So, as far as trade demand is concerned, because until January it is a trade demand, and that is certainly subdued. However, until Diwali, there was extremely negative sentiments with the trade channel, because there was overhang of all consumer durables with the trade channel. But due to good festive demand, trade channel is relatively better off. And keeping that in mind, we have launched some innovative schemes for the trade channel so as to capture some decent sale even in current quarter and in January.
All right. EBIT margin now, that has contracted by nearly 1,200 bips now. What were the key margin pressures in Q2 and your margin outlook now?
See, EBITDA margin is a function of, number one, gross profit margin percentage, and secondly, the top line, that is the economies of scale. If you closely look at the gross profit margin percentage, it is by and large the same. There is hardly any change YOY. However, when it comes to EBITDA, these are the expenses other than variable costs, which are relatively fixed, and on account of decline in sales, it has impacted EBITDA margin percentage, which we believe once sales normalizes should be back to normal.
Watch out for that. But Mr. Shah, with this, we let you go. Thank you so much for taking the time out and speaking with us this afternoon, and wish you all the best for the upcoming earnings.
Thank you.